Thank you so much for your time on the show, sir. And let's get into that market rally first and understand what the opportunities are in the market at this time.
Thank you very much, Ken. It's always good to be at the Power Lunch Show. So what we are saying is, and speaking as an infrastructure, not a broker or advisor or any firm, is just to try and define why we're seeing this so much run in the market. It's very simple. If you have 1 naira today and you keep it in the bank, the best you can get is probably 1%. And if inflation is reporting under 15, what it means is that you're eroding the capital of money or savings that you have. So you have a negative savings situation. So what do you typically do? You look for alternative assets. And if you look at the P ratio of the market, of the Nigerian Stock Exchange, it tells you something that there's an opportunity there. And I think most fund managers and individuals are beginning to look at alternatives, and it's becoming clearer and clearer that the stock market offers a better alternative, which is why you're seeing a lot of savings or money moving to the Nigerian Stock Exchange. And like you rightly said in your opening remarks, that the year-to-date market has gone to 30%. I mean, I don't know anybody who in his right mind is sitting on cash at 1% would not take opportunity somewhere else. Yes, a little bit riskier, but I think if you quantify the risk with the return, I think it's worth taking that shot.
All right, now let's get more deeper into the intricacies of what's playing out in the market. There, we understand that the Securities and Exchange Commission is seeking tougher measures and to bring on the KYC measures that are in place in the market. I'd like you to bring us up to speed at what's at play here and what the developments have been so far.
So thank you. I think that's a very important issue. Seeing investors come back to the market in terms of volumes being traded, in terms of value being traded, in terms of the number of trades we're seeing, and also the number of participants. Now, you'd recall that there has been this long-term discussion about an identity for the capital market and how we have unclaimed dividends that keep piling up, and the issue around what we call something like abandoned shares, which are not necessarily abandoned, but in general, there's a KYC problem within the stock market. Let me give you a bit of history. Back in the day when there's a public offer, how you get into the market was that the prospectus would have, at the back end of the prospectus would have a form which you fill. No validation is done about your name, address, telephone number, or even email address does not exist. But you fill that form and put a check to it and send it to your receiving agent, who now sends the check to the receiving bank, and then sends the form to the registrar. This was what was captured at the CSCS in terms of information. Now, KYC is important, and KYC helps in defining who the person is, how it trades, even from a CFTML perspective. Now, so over time, what was captured at the CSCS when we went to full dematerialization was a situation where you have incomplete information. So if you want to even send, if a trade occurs, you want to send XLR, which is the SMS we send to individual investors or institutions, you find that about 30% of them will fail because the number was probably incomplete. The telephone number was probably a landline. There's no BVN so that you can validate that the account belongs to this person. There's no account number. So sitting down with the SEC, the NSC, ourselves, and the market themselves, we decided that it was important that we put this KYC issue to rest. At least let's start doing something about it. So the SEC had directed all of us, the CSCS, the brokers, and the exchange, that starting from the 1st of November, no investor can trade without having his KYC complete. So it's like just the banks. The banks, if you don't have complete KYC. So for example, if your passport or your ID expires at the bank, you can't withdraw money, you can't transact with that account. So it's the same thing we're doing. I think it's a good thing. So today, if you don't have your complete KYC, you can't trade. It's as simple as that. And I think it's a good thing, and we're seeing a lot of issues come up with that. That's just in summary what I think the situation is currently.
All right, I'd like to get two things from you, though. First, I'd like to get what the feedback from the investment community has been since this has started. And also, looking at what's been playing out with the derivatives market, we understand that NG Clearing got the approval from the Securities Exchange Commission just about about a month ago from SEC to open the Central Counterparty House. I'd like to get to what you think the opportunities this will bring to the market as well.
So as we expected in terms of the KYC, and it's a good thing, I must commend, the new DG at SEC, who insisted that, look, and the commissioners, that we should go ahead and ensure that we comply with this KYC situation. And what we're seeing is a lot of pushback from, investors and brokers who, over the time we've talked about how we can quickly onboard. We built a portal for the brokers to be able to do this seamlessly from their own end. We validate the BVN account number through NIPS by an API. But, as with every change, there's always resistance. And so we see a bit of complaints here and there, but, working with the brokers and our team here, we are, making sure that our contact center is open at least 8 hours a day to help resolve all issues. Like with everything, there will be teething issues, one or two issues, but the whole idea is that when they come up, we fix them, and then more importantly, is best for the market go forward. In terms of NG Clear, yes, the license has been issued provisionally to NG Clear. The stock exchange is now working very earnestly with NG Clear to launch the exchange traded derivatives. They have a timeline. NG Clear is assigned an agreement with the technology provider that's going to commence or has commenced, work in terms of deploying that technology to service the market. It's going to be an exciting market now that we're seeing trade volume go to us 18 billion naira, which means hedging becomes very important for PFAs and every other market participant. I think it can be better timing than now for the start of a CCP in the market, and also a start of exchange traded derivatives within the exchanges.